demonstrate to the US that they can effectively use their own currency against them with potentially dramatic consequences. Ooh, I want to hear what these potential dramatic consequences are, Nima. At a time when the US is running massive deficits and needs to constantly sell treasury bonds to fund itself, we just corrected that idea, it does not. Having China emerge as a competing dollar bond issuer that can match treasury rates could pose immense financing problems for the US government. Again, this is just this brick wall of economic illiteracy. I mean, I'm just going to repeat myself to say that's not how it works. That's not how it works. It's not how it works. Going on. It could effectively end the US's so-called exorbitant privilege. It could end it, Nima.
Oh, sorry.
It could.
I'm trying to find where you were reading right now.
Uh, go up. Down. Stop.
Gotcha.
See the middle paragraph, the big
Yeah,
one
yeah.
at the end. Yep. So, yes, somehow some other country that doesn't issue dollars is going to end the privilege of the country that issues the dollars. Yeah, that makes sense.
Hmm.
Okay, continuing. But wait, you might ask yourself, what's the point of China having so many dollars? Don't they transfer the problem to themselves? They too need a place to invest all these dollars, don't they? I don't know, do they? You'd be right. The last thing China needs is more US dollars. In 2023, it ran a US dollar trade surplus of 823.2 billion. And for 2024, it's expected to be 940 billion. Like Nima just said, they're sitting on trillions of dollars, right? China is already absolutely awash with dollars. But that's where the beauty of the Belt and Road. Oh my God, this is just like going in so many different directions. But that's the beauty of where the Belt and Road Initiative comes in. Out of the 193 countries in the world, 152 of these countries are part of the Belt and Road Initiative. A very common characteristic of many of these countries have is they owe debt in United States dollars to the US government or other Western lenders. This is where China's strategy could become truly clever. China could use its US dollars to help Belt and Road countries pay off their dollar debts to Western lenders. But here's the key. In exchange for helping these countries clear their dollar debts, China could arrange to be repaid in yuan or in strategic resources or through other bilateral agreements. Okay, I think the example that I gave earlier of China of Russia selling oil for yuan and then China not even like accepting it back blows that out of the water. Right? I mean, this, and does this even make sense? Okay, so China's going to use all these dollars to help other countries pay the country's debts and have them owe it back in yuan.
I mean, it's very speculative, all of this, but also Chinese government now has to have some department that's in charge of investing US dollars, and so they have to invest in solid businesses, maintain those businesses, or whatever they're going to do with the dollar. Uh, why? It's like, why do you want to get involved in the business of venture capitalism now and business of investment banking? I mean, you can do that, but it's going to distract you from whatever else. It's basically, I still don't quite get the point of all of
Right?
this.
Yeah. Like I said, he's just leapfrogging from one non sequitur to another here. But I
Mhm.
mean, this is what in most economic circles this flies is something intelligent, right? Um, yeah. I mean, China doesn't respect its own currency, and they can't be trusted for anything. That they'll gut you side. I mean, the Chinese mentality is we're number one, and it's okay for us to steal from everybody else because we're the best.
But also, some, this thing where you're saying China could use U.S. dollars to help Belt and Road countries pay off their dollar debts. Okay, but it can already do that anyways with the dollar reserves that it has. What does that have to do with China issuing these
Exactly.
bonds? Now, if China were to issue these U.S. dollar bonds and using them for debt forgiveness for bankrupt countries, then I don't see how these bonds are still paying for you know same rates as regular treasury bonds, because now suddenly they become very risky gambles where, oh, the money is just used to for debt relief for third world countries, so there's no return. There's probably some losses on that. uh, I mean, or you end up owning some bunch of junk bonds, or maybe that's the whole idea behind this exercise. I don't know. Mm-mm.
I'll keep reading. This would create a triple win for China. They get rid of their excess dollars because that's what they want to do, Nima. They want to get rid of their excess dollars. They help their partner countries escape dollar dependency, and they deepen these countries' economic integration with China instead of the U.S. Again, that all these transactions happen within the central bank of the United States. If the U.S. decides they don't like any of these transactions happening, they can just go, nah, we
Yeah,
don't like that.
like
Uh,
they
yeah. For BRI countries, that's Belt and Road Initiative countries, this is attractive. Oh, he knows what's attractive to BRI countries, Nima. This is attractive because they can escape the trap of dollar denominated debt and threat of U.S. financial sanctions and get likely better conditions with China, which will help with their development. Oh, yeah. Yeah. China's going to give you a better deal. They're totally trustworthy, Nima. Like, I know that the U.S., the way it dominates the world and uses the dollar as a weapon is I'm not like subscribing that that's a good idea, but would would you rather think that the U.S. would have your back better or China?
yeah.
I mean, give me a break. In effect, this uh, he's missing a word here. In effect, this would China. In effect, this would be China placing itself as an intermediary at the heart of the dollar system, where the dollars still eventually make their way back to the U.S. just through a path that builds Chinese rather than American influence and progressively undermines the U.S.'s ability to finance itself, and with all the consequences that this has on inflation. And again, this will not interfere with the United States' ability to finance itself at all. And so wait, the dollars still eventually make it back to through the U.S. just through a path that builds Chinese rather than American influence. Again, they already have all these dollars, like you said. They have trillions and trillions of dollars. Why can't they do? Couldn't they have done this already with the dollars that they already have?
Yep. And maybe they do it. Maybe this is an idea that they might pursue. Whatever. I don't know, but it I don't see what it has to do with this particular bond issue.
Yes. Going on. At this stage, you probably tell yourself, come on, there's no way China can do that. The government surely has tools at its disposal to prevent this stuff, like I just mentioned. And the answer, surprisingly, is that there's actually little the U.S. can do that doesn't undermine them in some shape or form. Like what? The most obvious response would be to threaten sanctions against the countries like Saudi Arabia or institutions that buy Chinese dollar bonds. But this would further demonstrate that dollar assets aren't actually safe from U.S. political interference, further encouraging countries to diversify, compounding the problem. If this was true, then the United States sanctions countries all the time. They sanction countries all the freaking time, right? If this was true, then whatever problem he's describing would have already happened. Going on. The dollar's strength partly comes from network effects. Everyone uses it because everyone else uses it. No, everyone uses it because it gives you access to the strongest economy on the face of the planet. And the United States has a policy that gets enough dollars out into the system and honors them, unlike China with its own yuan, that there's enough liquidity to flow around and actually be used as an international currency. So the dollar strength partly comes from network effects. Everyone uses it because everyone else uses it. But as we've seen with Russia's sanctions, with the Russian sanctions, it creates. Hold on, this grammar's weird in here. But as we've seen with Russia, sanctions create a coordinating moment for countries to move away together, weakening these network effects. Well, I would really like an example of how the US dollar got weaker because of the sanctions on Russia, because as far as I've been able to tell, Russia's had nothing but problems due to the sanctions, and the US's dollar is stronger than ever. Like, Nima, do you remember when I think we did that with that like neon revolt tweet response where there was this idea that the Russian ruble was going to get stronger and stronger and the U.S. weaker and weaker after the war started, and we've literally seen the opposite since then.
Yeah, and Russia was going on a gold standard supposedly too,
Yeah,
but
right.
the thing.
We debunked that like we're doing this.
Um, Well, I mean, Russia has, I think, been. I disagree with you, kind of. I think Russia has come back almost, I would say, stronger um, as a result of the sanctions, um, and has gained more independence, I guess you could say. But um,
I wasn't referring to like the internal economy. I was referring to like the value of the currency on the international stage.
yeah, I don't know what that is with Russia right now. I didn't, but yeah. So um, the dollar strength, right? So with the Russia sanctions created coordinating one for countries to. So politically, yeah, it could happen. If but if the, so he's saying that if there's going to be more sanctions, then the U.S. would isolate itself from the global economy.
Right, everybody would move away and start using other currencies,
Right,
supposedly.
and that's to some extent that's happening, I guess. But I don't really know if it's significant for the U.S. economy.
Right. Well, and then from what I understand from BRICS, because everyone's like, "Oh, BRICS is gonna," even Trump was like threatening BRICS. Yeah, BRICS is gonna make this new currency that is gonna move around the dollar. And from what I understand, every time BRICS meets, they just like look at each other and go, "Well, I'm not working with you," and then they leave. So when BRICS actually produces something useful,
Right.
I'll be
I mean,
interested.
yeah, it's a long shot, I think, because even China itself has a currency that is not a global reserve currency because it's too manipulated by the Chinese government. And until they can let that go, it can't really be. Not even the Chinese yuan can be a global currency. But how's the BRICS, mishmash, conglomerate currency supposed to work out at all? If not even the Chinese currency itself can be a global currency. Given the
Right.
size and all scope of the Chinese economy. Maybe one day it will be, but that would require for the Chinese economy to become truly sustainably the largest economy, and for the currency to be free floating.
Which is highly unlikely given the fact that they're literally about to die out because of their lack
That's
of
the thing. Yeah,
repopulation rates. Yeah.
they're now declining in population. So that's the big question. Where's that going to lead? So it doesn't seem to be conducive to economic growth.
Yes. I'm going to keep going. Another option would be for the Federal Reserve to raise interest rates to make U.S. Treasuries more attractive. But this would be self defeating. It would increase the U.S. government's own borrowing costs at a time when they're already struggling with massive deficits, potentially triggering a recession. Now, I mean, if this is the first time you're listening to us, we have just gone over this ad nauseum. Um, Raising rates is inflationary. Lowering rates is deflationary. The mainstream economists, they have it backwards.
But okay, so he's saying another option would be for the Fed to raise rates to make U.S. Treasuries more attractive, but that's not necessary. The U.S. government doesn't need to make U.S. Treasuries more attractive. It dictates the rates that it pays on the Treasuries that it issues, and it doesn't need your money. Basically, it's
Right.
giving you the option to earn some interest. So there's no need for the U.S. Treasury to compete to make their bonds more attractive. They set the rate and the bonds follow. That's how it works.
Right. And then if there's this idea that okay, let's say the U.S. Treasury sets the rate at 4%, and China comes along, and goes, we're going to set it at 8%, so everybody comes to us for to bring us all the money instead of going to the United States. Well, they're just setting themselves up for a Ponzi scheme,
Yeah,
right? I mean, at some point they won't be able to pay it back.
it's basically now
Yeah.
it's an investment scheme that you have to maintain somehow. So
Right.
I don't know.
All right. Uh, yeah. So and China getting similar rates as the US could simply match any rate increase. Yeah, I just addressed that. The US could also go for the nuclear option of restricting China's ability to clear dollar transactions, like I was just mentioning, but this would effectively immediately fragment the global financial system. Again, they've done this before and it didn't fragment the financial system, undermining the dollar's role as a global reserve currency, exactly what the U.S. wants to avoid. And with China being the most important trading partner of the immense majority of the world's countries, nothing is less sure that the U.S. would win at this game. No, I think the U.S. would win, and again, and Trump apparently is planning on barking down that road anyway. But the again, China's literally on its way out, like from an actual population standpoint. I just don't know what else to say other than like this whole thing of China's economy is based on the government like massively subsidizing everything all the time within the country. Right. That's why you see these, skyscraper ghost cities and light rails that don't go anywhere and all this sort of stuff is because the government just like throws money at everything to be like, we need growth, we need growth, we need growth. But it's not real growth. So they're investing all this money to build things for nothing while at the same time, um, Nima, did you freeze up?
No, I'm just sharing something.
Oh, just shared something else. Um, Let me get it up there. Oh yeah.
Right.
Okay. Nima's got
So
a projection chart for China's population.
this is China population projection. By 2050, population is expected to be about 1.2 billion. Currently, it's 1.4 billion. Okay. And it also says here long-term projections by 2100, China's population is projected to shrink to around 525 million, with a working age population of about 210 million. Population is expected to decline by around 900 million people between 2023 and 2100. So yeah, that's our main case against China, I guess. So maybe their idea is they're going to make their worker productivity so much more efficient with their AI and all that. I don't know, but that's the problem. The population shrinking that much. Um, we'll see. Well, it remains to be
Yeah.
seen where they'll lead the country.
Can you pull the tweet back up?
Yeah. Okay, there it is.
Alrighty, add to scene. There it is. Boom. Okay. So,
In
yeah.
short,
Uh,
okay. In
y-
short, this seems to be like some sort of Tai Chi, 4 ounces moving 1,000 pounds, moved by China, using minimal force to redirect the dollar's strength in a way that benefits China. We don't know that. Like I wrote at the beginning, however, at this stage, this is most likely just a message by China to the upcoming Trump administration. We can do this, so maybe think very carefully about all the nasty things you have in mind for us. The beauty of this move is how strategically elegant it is. It costs China almost nothing to demonstrate, but forces Washington to contemplate some very uncomfortable possibilities. It costs China quite a bit. It costs them all the bureaucracy to establish an investment company that now has to conduct profitable investments of U.S. dollars
in
given to
order to pay back the bonds.
given to them by investors that have the expectations that this money will come back as surely as it does with U.S. Treasury bonds. So,
Or they could just play Ponzi scheme,
so
right? And just
they have to be assuming a zero default rate and very consistent flow of money. What are they going to do? They're maybe just going to turn around and invest it in U.S. Treasuries, and end up buying U.S. Treasuries uh, with that invested money.
actually, that would be hilarious, right? Actually, I wonder if they're actually doing that, Nima, because if they're offering 1 to 3 basis points more and they could turn around and buy treasuries with it, maybe they could afford to pay the tiny itty bitty bit of difference.
No, it makes no sense because they would. Oh yeah, right. So they have to subsidize their fund basically.
Right, but subsidize it to the point of 0.01 or 0.03%,
Right.
right?
So it's a sure money loser basically. Um this whole endeavor.
And I mean, I think this is a good opportunity now that we finish this tweet to again take a step back and recognize that we live in this world of total economic illiteracy. And while you don't while you're in that world, stuff like this sounds like it makes sense, but once you start getting a framework of how economy actually works, this sort of stuff turns into word salad nonsense. And if you haven't tuned into our show before, please go back and start watching through our shows on MMT and on economics, because you will find that what you thought was up is actually down. What you thought was down is actually up. Left is right and right is left. Everything is totally backwards, and all like so many of these issues like this that people are like, "Oh my God, China's going to do whatever." The international
Yeah.
BRICS and the blah blah blah. You just can stop worrying about it. Please like, comment, and subscribe to help us grow this channel. I think we cover a lot of good stuff. We're covering ideas that you're not hearing anywhere else.